Welcome back to Really Mary. Today we're talking about mortgage rates. Now we all know that's near and dear to Cheryl Stokes, our guest today. But what we're going to talk about that is what's happening and more importantly, how this compares to history. So talk to me about what's happening in mortgage rates.
So mortgage rates have declined this year, and they have come down over the last couple of weeks. They are not where everyone had hoped they would be at this point in time, but they are on the decline. We're expecting a slow decline in rates.
Okay.
We're not going to have a fantastic drop that everyone jumps back in a day.
Yeah.
But if we have a continued slow decline, I think we'd be in good shape.
It makes me laugh because I swear for 2, maybe 3 years, we've been saying, it's around the corner. It's around the corner.
Right.
And now we're finally saying, I don't think it's around the corner.
We just can't say that anymore. You know, we said that for 18 months, and I think the case presents itself that it's going to be a slow decline.
Yeah, exactly. So what is our friend Jessica Lautz at NAR saying?
So Jessica says this is the lowest rate for the 30-year fixed in 2 months, true, marking 6 consecutive weeks of rate declines. It results in a monthly savings of $60 on a $400,000 home, which represents a 20% decrease from when rates peaked recently at 7.04%. Is $60 a deal breaker for someone purchasing a home? She says perhaps not. I would say it can definitely be a deal breaker.
Okay.
However, it could influence a buyer's financial perspective, shifting from the mid-6 range instead of in the 7% rate. It's going to make them feel better about it. Ultimately, vibes rather than data could prevail. And I will say $60 can definitely, for a first-time buyer who's got a tight budget, $60 is a lot. So it can't make a
you're
difference.
talking to my son, Matt, who is a first-time home buyer.
Yes.
And his numbers are very thin.
Right. And $60 can make or break a file. I've seen files as close as $10.
Yeah. Wow, $10. That's crazy. So what is Sam Cater saying?
The drop in mortgage rates combined with modestly improving inventory is an encouraging sign for consumers in the market to buy a home. And I think that's true as well. We have been saying for years, hop off the fence and get in now. Hop off the fence and get in now because prices are going up. All true. But with prices now going up more slowly, rates starting to dip a little bit, it provides affordability and opportunity for some of those people that have just really been struggling to have the energy, the sign to say it's okay to jump off the fence.
Okay.
You know, they're very hesitant, and this might be the thing to get them to go forward.
I love that for our buyers out there that are in that category. You know, this is a crazy slide, Cheryl, and I'm going to let you discuss it because
it's very busy.
It's very busy. So go for it.
Let's just look at the side where it says a home purchase of $360,000. We were just talking about $60 a month, right? So at 7.5, there is your principal and interest payment, but at 7.25, it's approximately $60 less. And every quarter it goes down another $60. Well, if we get to the 6.5 range, $2,275, that is less than rent. So we're back to the point where it might be a better deal to buy than to rent. And we always know it's a better deal anyway because you're investing in equity. But this makes more sense to someone entering the market because it equates to what they're already paying.
Absolutely.
Really makes a big difference.
Well, she explained it really well because this is a busy chart, but you can really kind of go across. This is 440, purchase to 360 and kind of see where those rates are. Clearly, they'd want to call you, Cheryl, to really understand their personal situation.
Yes, because every client is different. And the thing to remember about rates is rates are just not what's advertised in the newspaper. It is property specific, occupancy specific, credit score specific, debt to income specific. So each individual really has their own rate.
Yeah. So something to keep note of. Business Insider, what are these guys saying?
If inflation continues slowing this year, we should see mortgage rates go down a little bit. Weaker economic growth could also help rates fall. True.
Good statement, Business Insider. But here we go. Rate of inflation ticked down in February. So we've been saying forever that we need the rate of inflation to be under 2%.
That's what they say.
And therefore, when we get that, When we get that, interest rates are going to go down. So, Cheryl, I'm looking at this graph, and it says March of 21, we were under that 2% target.
We were.
And so rates have gone up since March of 21?
They have.
Yeah.
Yeah. They were down in 21, but people have to remember that end of 20 to beginning of 22 was an anomaly. None of those numbers made sense. If you look at traditional graphs, you want inflation to come down so you can get a lower rate.
Yeah. Well, I don't know. At 2.6, this is pretty good because the news right now is being meant to terrify, not clarify. And they are talking on mainstream news a lot about inflation and tariffs and everything else.
Yep.
Our economy is going to go upside down. Did it? Has it?
It hasn't so far.
Yeah.
So the question will be, how does it continue to trend?
Yeah.
But this seems as if it's trending in the right direction.
I love that. I love that. All right. So we have Joel Berner, who's chief senior economist at realtor.com. Tell us what he's saying.
So Joel says, though mortgage rates have fallen over the past several weeks and look more promising to prospective homebuyers, we are far from the home finance environment of the post-pandemic home buying frenzy when rates were below 4%. And we are unlikely to return to that environment. And I wholeheartedly agree. And I frankly don't think we should return to that environment.
No, I don't know who I was talking with recently, but I'm going to bring it up again. What was your first home? What was the interest rate?
13.5%.
Right. I think mine was 14. And when I got a 10% on the next home, I was like, yeah, this is bonus.
Right. And 7%, which many people have right now, is the 40-year average. So if you're getting in under 7%, you're beating the 40-year average. And in the sixes is affordable for just about everybody.
Love that. So that's where we are. We're in the sixes. That's wonderful. All right. So maybe I don't have enough money. Affordability is a problem. What are some of the things I can do?
So there are alternative financing options that we can explore. Okay. And that, for the first-time home buyer right now, affordability is the key. We live in an area that is not very affordable.
Right.
So things that we can do are buydowns, seller concessions, down payment assistance, all of those things that help give that first-time buyer just a boost.
Sure.
In getting qualified. And those things help make the whole process more affordable for them.
So if someone doesn't know what, a mortgage buy down is, tell us what that is.
So this is a pretty good explanation. It's a little more nuanced than that, but a mortgage buy down, also known as a mortgage rate buy down, involves paying an upfront fee in exchange for a lower mortgage interest rate. Okay. The rate can be either temporary or permanent, depending on the buy down type. Now, this is a really important thing. Everybody knows you can pay points to buy down the rate. That is a flat fee. It buys down the rate for the entire life of the loan. Okay. And while that may help someone qualify, just like it said in an earlier slide, it's how they feel about what they're doing.
Right. It's a vibe.
They may qualify, but they're still afraid.
Okay.
So a temporary buy down, not an adjustable rate, but a temporary buy down allows them to lower their interest rate for, say, a 2-1 buy down, 2 years.
Okay.
They lower their rate by 2 points.
Okay.
They're still qualifying at the higher rate, but it feels better because they're paying less in that first year.
Yeah.
Then the second year, it goes up by a point, still not at that top rate.
Right.
And in year 3, they're back to the spot where they qualified to begin with. And maybe by that time, the rates are down and they can refinance. Yeah. But they feel better because they're locked in, can't ever go any higher, but they are paying at a lower amount for the first 2 years.
Okay. And so either the rates are going to go down in 2 years or they're making more money or they feel...
And if they go up, it doesn't matter because they're locked in at that rate in the sixes. But if you think about it, if someone could get 6.875 today and they did a 2-1 buy down, they're paying at a rate of 4.875 for the first year.
Wow.
5.875 for the second year. And they're locked in at the 6.875.
I love that. So this is really something that you need to have a discussion with your realtor as they're putting together the contract, because we can ask for those concessions when we're putting the offers together.
Especially now, because it's a seller's market, right?
Especially now.
So this is a seller concession that is utilizing a way for you to pay less for 2 years.
Right. That's wonderful. Now, this one talks about really our first-time home buyers. Are they looking for the mortgage rate buy down?
Well, they are. They're looking for help. They don't know that that's what they can do. So it really does become important that they talk to the realtor and they talk to their lender about what the options are. They are definitely looking for help in getting themselves in the door.
I would agree with that. Again, case in point, my youngest son, who gets to talk to me at all different hours of the day. Love you, Matt. And is looking to buy. He's come out of college and he's ready. So what is Lance Lambert saying about ARMs?
Lance is saying about ARM products today that they're different from many of the products issued in the mid-2000s. We all remember those. Before 2008, lenders often approved ARMs based on a borrower's ability to pay the initial lower interest rate, which was dangerous, and sometimes they didn't even check that. Remember the ninja loans. Today, adjustable rate borrowers are qualified on their ability to repay at the highest rate.
So I love that, because you know what? I did have an ARM when we moved here. And that was it was more before.
And if you're lucky, ARMs go down as the rates go down, but they can just as easily go up, and you have to be able to cover that increase.
Yeah, exactly. So again, talking with the lender that understands that, making sure you get the right product. This particular slide talks about really the share of people hoping to buy a home in the next 12 months is about 15%. You've seen on our graphs lately that, the last couple where we said, here's what 2025 is going to be, and it's way above what happened in 2024. People are jumping back in.
They're hungry to buy. People have been hanging off the market now for 2 years.
Yeah.
They're ready to buy.
So if you're thinking about buying this year in 2025, interest rates are at a very affordable rate. So until next time, I'm Mary Bartos, the Bartos Group of Premiere Plus Realty, and my dear friend Cheryl Stokes from New American Funding.